Hello and welcome to In Conversation With. I'm Liz Lumley from Finextra, and today I'm speaking to Diarmuid Mallon of SAP, and we're going to be talking about mobile commerce and customer experiences and sort of the difference between the developed and emerging markets. So, you know, we in the West, Western Europe, UK, consider ourselves the developed world, but how does a customer's experience with mobile commerce in the UK compare with, say, a customer's experience in places like Asia, the emerging world?
Absolutely. So a very good point. There's a real big difference. And that developed part, I think, is very often this sort of misleading term that people sort of focus on development in terms of the mobile technology. You know, everyone here has a smartphone, or increasingly it seems that way. Whilst, you know, in emerging markets, most people are still with quite basic phones. And so the preconception would be that, therefore, you know, we would have a better service here. Mm-hmm. What's really interesting is the sort of different philosophy that banks have taken in emerging markets to developed markets. So here, you know, the conversation, if you go and look at any article about mobile commerce or mobile banking, and in it will be at least one or two paragraphs about mobile NFC. And the big question about when it will come, and sort of the industry slightly hung up on the next new technology. Whilst in the developed markets, what they're actually doing is getting on and using the existing technology and focusing actually on what services can they bring and what better value, what new revenue streams. And so it's really quite a different approach they're taking.
That's kind of interesting. So you're saying it's almost like the West is waiting to offer a service until they see what technology is going to be dominant, while the East is sort of just getting on with it and offering.
Absolutely. You know, there's this sort of, you know, if only we had, is the sort of the general sort of position. So, you know, we would, you know, if we have mobile NFC, you know, this, and if you're not familiar with NFC, it's basically the same technology you have in contactless credit cards. So the whole idea is that, you know, it's a smoother customer experience if you can just, you know, touch your phone to do something, which is absolutely true, but it isn't here yet. So just waiting for that, you'll always be waiting, and when that comes, there'll be another technology that will be even better. There's always a better technology further down the line. That's the nature of the beast. Whilst if you actually look at what you've got today, and then you work out what can I do within the constraints of the technology I have at hand.
So, I mean, whenever people, you know, talk about mobile commerce, often this, you know, the overused word innovation comes up. You know, what's new, what's cool. What's from the emerging world? What sort of innovative technologies, moving on just from service to technology, have you seen come out of the emerging markets?
Well, so I think there's two, you know, ones that really spring to mind. So, you know, a challenge for a bank is, you know, how do I reach more customers? That's always a challenge. You know, I want to reach more people, and equally, I want to offer new value to my customers, and that would, of course, imply new revenue streams for me as a bank. So, you know, if we look at the reach one, how do I reach new customers? Well, the traditional way is I would open more branches. I would perhaps extend my ATM network. Now, you can only go so far. That's a very expensive way to acquire new customers. And in fact, the current pressure, if you look, you know, in the West, is actually discussing about, you know, banks are slightly contracting by and large their branch network. So that's a challenge. How do you do that? Now, if you go, say, to Bangladesh, Dutch Bangla Bank, they had exactly the same problem. They were one of the largest banks in Bangladesh. They had around 2.5 million customers, which, as I said, put them around one of the largest. But that was actually out of a total population of about 161 million. And most people are unbanked. And so there was a big opportunity to reach these new customers. And they actually had a mandate to address financial inclusion, so they needed to reach these customers. So building out branches to reach, you know, another 150 million people, that's just never going to happen. Yeah. And actually, local regulations limit the number of new branches a bank can open. So that just the physical way of approaching customers was never going to work. So they looked at mobile, but not mobile as in, here's a better way to serve existing customers, or, you know, to tell someone their bank balance on a Monday morning.
Because the expansion of the branch would be in people's pockets.
Exactly.
Okay.
But more than that, it's not just the branch as in accessing the bank, but actually even joining the bank.
Okay.
And so here they were actually acquiring customers through mobile. So because there was no branch for them to go to sign up to, not within, you know, travel, you know, a sensible distance. And these people do not have smartphones. So you can't have some clever app that someone will be using You need something which just works with the existing phones. And so that's what they've done, and been very successful with it. They, in under 2 years, they've added more than 800,000 new accounts. Well, that's a 30% increase in number of accounts they've got, all through just using that existing mobile device.
Yeah. I mean, is there, I know you mentioned the bank in Bangladesh, but, sort of outside of sort of technology and service, I mean, are there any more examples of specific banks that have really sort of sparked your interest?
Well, yes, and in fact, actually, I'll be a little controversial here. Here's one that's not a bank, but, I was saying reach, but actually, how about some new services, some new lines of revenue? So in Qatar, the large operator there, QTEL, had a service for mobile remittances. So you could send money back home if you were a migrant worker. Qatar is about population 2 million people, of which 1 million are migrant workers, blue-collar workers. And they remit back 70, 80, 90% of their salary home. So there's a very large remittance corridor. So that was a very valuable service for them. But what they saw actually was there's lots of small businesses who need to pay their staff. And so what they added was actually salary disbursements to the service. So now you can pay your staff straight into their mobile account, into their mobile wallet. And they can pay bills from that. So they're actually becoming almost like a bank in terms of at least the service offering. But now imagine, that average wallet might have had a couple of dollars a month in there. Now the salary's being paid into there. So that's a big new source of revenue. But also for the blue collar workers there, it's a really great valuable service to them, because now their money's instantly in their mobile wallet and they can remit it whenever they like.
So I mean, when we originally talked about sitting down and having this conversation, you came up with this theme of what the West can learn from the East. So of all the sort of services and technology that you've discussed, I mean, how can the West benefit from the experiences of Bangladesh and Eastern countries?
Well, so I think it is this philosophy approach of saying, well, what can we do that will actually bring more value? And this value is not just a sort of something that is a bit artificial or something that you can't name. I mean, we are talking really about real value. If you look at the current business models or value chains, if you want to call them that, there are a set number of players. And if you move to mobile, we introduce more people into that value chain. So how does that work if there's no more value in the if there's not more value there? It doesn't work. You're just cutting the existing pie in terms of more and more thinner slices. So you actually need to bring new value in, and that's in Asia. They're very much focused on that, is creating more value into the chain. The other thing, of course, is you need people the actual customers to start using the service. So there has to be value for them. They have to change their current behaviour, or else they're not going to move. So, if we go to that mobile NFC phone, why are they going to choose a phone that has that? Well, that has to be a reason that brings value to them.
So I think we should probably round up our chat with that inevitable crystal ball question. I mean, where do you see mobile commerce moving in the next year to 5 years, and will the West catch up, so to speak?
Well, so it's a really interesting question, and when we first started talking about this a week ago, I had a very different answer to what I'm going to share today, and that is the announcement yesterday, as we're filming.
Exactly.
The announcement from the UK Payments Council about the new person-to-person payment service that's going to be launched in the UK that's going to be using text messaging. It is a perfect example, actually, of a service that is running in the East already today, and actually coming to the UK. So what's really interesting is actually, I think the West is now getting it. This service means that in the UK in 2014, that if I want to send you money, I just need to know your phone number. And I can send money to anyone in the UK just using their mobile number. And I don't need a smartphone. I don't need to install an app. So I think actually what's interesting is the West is really starting to get it. Focus on the service and the value, and don't get distracted by the technology.
Excellent. That's very good. Thank you very much. Appreciate it. Thanks again.
Thank you.